Okay, so the start of the time, 10:50. Okay, what do you notice about price at the start to the end here? Tell me in the replies. Yeah, that's also a good sheet as well. The one CJ just sent. Okay, so expansion takes previous day low out. Yep. Okay. Now, what's the difference? So this is the 20-minute period. No, this is the previous 20-minute period right here. What's the difference between this and this? What's the difference between this 20-minute and this 20 minutes? You got a little AMD, yes, but the big difference is the displacement. You see how in this zone we're just kind of consolidating, chopping around. You kind of get your accumulation here. And then right when that macro hits, do you see how much the volatility changes here? Like, do you see the jump in volatility increase here to here? Even though we don't run high day here, or even though we don't go up, there's a huge difference in volatility here. Okay, and this time is basically programmed to when we have an obvious draw and we're consolidating, it's programmed to hit that liquidity during that time. Okay, so if I'm very confident, so here's a great example. Let's say we're long in this fair value gap, okay, and this is how I teach inversions. Okay, the way I teach inversions is, okay, if we violate this fair value gap, I think we're gonna go to low day, whatever. Okay, so let's say we violate this, which we did, and now we think the draw on liquidity is low a day. Okay, well then when would be a good time to run low a day? During that next macro time, okay, because we just consolidated a whole lot. If you're long, you're probably getting scared out of your position here because you're like, okay, well, we violated this fair value gap. We're probably going to dump. You're getting out, and then you get this little manipulation here to trap more longs. And then we run low a day right at 11:05, which is during that macro time. Okay. Now, let's say it was very volatile here, and let's say we actually ran low a day in this increment here. Let's say we ran low a day here. Would price be likely to run low a day again here in the macro? Yeah, probably not. Okay. It probably wouldn't be likely to rerun this low a day during the macro because we would already hit it here. Okay, so that's something you really want to keep in mind. I know, like ICT, he's tweeted, okay, this is macro. And there's guys coming into the market every single day like, oh, we have to run here. We have to run this macro or whatever. And sometimes you're just not going to get a lot of action there. Okay, a reason why you might not get a lot of action during macro is because we maybe already run that high low of day before the macro begins, and we already have a lot of volatility before. The only reason this works here is because we can consolidate here. We don't really have big price movement. We violate this fair value gap, so that made sense for the macro to run low a day. Okay, but if we already ran low a day here, would we run that low day again in that 10:50 to 11:10 time? Probably not. Okay. So you can't just go in and expect to run every macro because you're not going to get a run every macro. All right, so same here. So this is the 1050 macro right here, or the 950 macro right here. 950 to 1010 right here. Okay, so again, this is a little more of a hindsight example because it's not the cleanest price action. But for example, right here, okay, this is before the macro starts. You kind of get some volatility, not a ton. Like you can see, all four of these candles kind of just stay in the same range. And then look what happens when the macro begins. Right when this macro begins, you got boom, 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 three very giant candles going right to this high. And what's the importance of this high right here? Does anyone know? And a lot of my premium members will know, but yeah, it's a intermediate term high inside of a fair value gap. And if you don't know about this, Okay, these highs are targeted a lot. Okay, and the thing, why does this make sense for us to be hit during the macro? Because here's the 930 open. Okay, we get a move down. Okay, and a lot of times what happens is we get like a fake move at open. So here's your fake move, and then you get a little consolidation here. That macro time begins, and then boom, we run that 930 high that we created open inside this Rayleigh gap. So that is a key high. Okay, as soon as the macro starts and you see a candle like this, I mean, this is a lot more hindsight here as well, but you could have said, okay, this volume imbalance was respected here, respected there, and boom, third candle kind of breaks this little volume imbalance. So you expect a run in the macro to a high like that. So you can kind of see the difference like the macros make here. Like I said, if we got a ton of volatility before the macro started, these price runs are not likely to happen. They're only likely to happen if we kind of consolidate before. So like here, we consolidate and then you get a run during macro. Here, there's somewhat of a consolidation, and then you get a little run right when the macro starts. We hit the draw. Okay. I think the best example for these macros is going to be something like this. Let me see if I can find like a good example of like equal highs or equal lows. So I'm gonna go to the previous day. Okay. See if I can find a good example here. So you really want to look for like an obvious draw on liquidity. So I think from the previous day, we had really obvious equal lows sitting right here on morning. Okay. And if we go to the smaller time frame, we were kind of like the whole morning we came really close to hitting them and we never hit them. Okay. We never actually hit them till, I mean, we ended up hitting them at 10:40. But here's like right here. Okay, what time is it here? It's 9:30. Is 9:30 a macro? No. So we have our draw on liquidity. The objectives here. We're in 9:30, which we know 9:30 is not a macro. So does 9:30 have to run a certain liquidity? No, it doesn't. And I was actually short in this trade, and I ended up getting south to break even because price, it almost hit these equal lows, okay, and it just failed and it just reversed on me. Okay, so I ended up getting stopped to break even here. All right, but here's like a key example of, okay, here's a macro, we don't run it during here. And then you can kind of see the next macro starts at 9:50, okay, which is right here. And at 9:50, okay, what happens after 9:50? Well, we run high a day. So there's our liquidity purge in the macro. Okay, and then once we run high a day in the macro, that's when you can look for your reversal because you see, okay, now the macros run high liquidity, or high day, I mean. Okay, then you can look for your model. And I like the inverse model. You can see, like, I mean, this is an example of the inverse model. You can see we break this bearish for or this bullish for Rayleigh gap, and then we come and violate this. Okay, and this is my model. Now, are there people in here who trade breakers? Are there people in here who trade reapers? Right? There's probably people in here who have different models than this. This is just an example of one model you could have found here too short. It doesn't have to be an inversion. That's what I just prefer. So yeah, just because there's an inversion here doesn't mean anything. There's also an order block here. So maybe you're an order block trader. You could have shorted this order block right here. Okay. It honestly doesn't matter what your model is as long as your model is here. Okay. And don't worry about reapers. Yeah. Okay. And then you can see this one. We run, look at, so we run the draw on liquidity being these equal lows. We run it at 1042. So because we run it at 1042 here, what does that mean? What can we infer from running at 1042? Yes, so we ran it before the macro. So what might that mean? What might that mean when the macro starts? No. If we run the big objective right before the macro starts, what might that mean when the macro starts? Yes, that means we're probably going to get chopped and we're probably not going to do anything, because if we've already ran the big objective, these equal lows, okay? And here's the thing. I don't care for the macro or not. The draw on liquidity is draw on liquidity. These equal lows are my draw all morning. So like as soon as you see something like this, these are still the draw. It doesn't matter what time you run them. Like you're still going to hold no matter what. So let's say in hindsight, I take a trade here, right? I'm not going to sell, or I'm not going to cover my position just because we're not in a macro here. Like I'm still holding to these, and whatever time you hit them, that's what time you hit them. And if I see my position, the entry or the limit hits before the macro, well then I'm just gonna be like, okay, great, the position worked. I know the macro now is probably not gonna do anything. Okay, does that make sense? So it doesn't mean you have to like get out of your position if we've hit something before the macro. It just means when the macro starts, you wouldn't probably expect anything since the draw on liquidity is already hit at 1042. And keep in mind the next macro starts at 1050 because that's DT says. Okay. And you can see that 1050 comes, and what does the market do? We kind of rally a little bit. Don't even hit low day here. Don't run liquidity here. We kind of fail to. Go back up, chop, 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 and just we start chopping around there. So, like, I'm no matter if we're in a macro or not, right? I'll take a short if I take a short, but it just helps some traders' conviction. There's been times where I've been in a trade and we're just consolidating, and then it gets to a macro, and I'm like, okay, we have to run this low during this macro, or else this play is probably going to fail. And usually we end up running it during the macro, but if not, sometimes I'll like scale some just in case, because if we chop and don't run a low that I really think is going to hit in between one of those macro times and are really close, that is usually not a good sign. Okay, so that's something you can go and backtest. But like sometimes, even if I'm profit, I'll just scale a little more than my position if we don't end up running a low or something in that time. Okay. So again, that's another gem about macros. If it's already ran, then don't expect the macro to do anything. Meaning if the draw on liquidity or the big draw is already ran, the macro is probably not going to do much. Does that make sense to everyone? Type 1 if that makes sense. Okay, and for this to work, you have to have a good obvious draw on liquidity. So like in this example, there's equal lows here. Okay, that's like my favorite draw on liquidity, but if you're just kind of guessing, then sometimes the macro is probably going to be useless to you. All right. All right, so now you understand a little about that. So now I want to go over 10 o'clock. So I'm gonna do something here. So I'm just gonna draw a vertical line at every single 10 o'clock I see here. So I'll probably do it on the. I'll probably just do it on the 1 minute here. Okay. All right. So let's begin. So at 10 a.m., I'm just gonna draw a vertical line everywhere I see. So here's 10 a.m. Okay, and I'm just gonna try to see what's in common. Okay, now if you already know, don't answer. Like if you already know this, don't answer. If you have no idea, see if you can guess. There's that, and I'll go back and show you guys all these lines here in a second. There, I'll zoom in on these in a second. And there, I'll draw two more. Okay. And I am there. And 10 a.m. There. Okay, I'm gonna zoom into these. Okay, take a little quick look at these. Okay, so here's 10 a.m. here. Okay, just take a look, see if you can figure out anything. Here's 10 a.m. here. Here's 10 a.m. here. Pay close attention to this one. This will tell you a lot if you know what 10 a.m. does. Okay, here's 10 a.m. here. Okay. Here's 10 a.m. here. It's pretty clear. Then here's 10 a.m. clear here. Okay, and this is kind of clear. All right, so what do you notice about most of these 10 a.m. times. Yeah, a lot of times if we hit 10 o'clock, they tend to be reversals because if you know anything about, I mean, I'm pretty sure quarterly theory already says this. I'm not exactly sure, but the 9:30 to 10 o'clock time tends to be the Judas swing in the market, meaning the 10 o'clock will go the opposite way. However, it's all in, like, this is where you have to apply ICT, like, in a very smart manner. If the draw on liquidity is equal lows, and it's very obvious it's equal lows, and the market dumps it open, do you really think the 10 a.m. time is going to reverse? Yeah, if not really. If there's equal lows and we dump off open and it's 10 a.m. and the equal lows still haven't been hit, well then if I'm applying ICT, well then I know that's probably not a Judas swing. I know that's probably the real move. Okay. So it all has to be in perspective. Now, from my back testing, okay, I'll just show you the stats. So an FxReplay, these were stats right here, which I need to do more of literally just taking the inversion after the 10 a.m. reversal, no matter what the bias was. Okay, I didn't even look for a bias. I just, whatever way you moved to 10, I kind of took the first inversion I saw. And you can see it has a pretty decent win rate, okay? And I think it's important because it really shows you, even no matter the bias, we'll still get like a 10 a.m. reversal a lot. And the reason for this is I don't know how this pertains to quarterly theory, but I know like when you go in the 4 hour, okay, the 4 hour candle opens are 10 a.m. or 10 a.m. and then 2 p.m. Okay, so like 10 a.m. is the 4 hour candle open. Okay, so that's why we'll tend to get some reversal at 10 a.m. because that's the 4 hour candle open. And yeah, exactly as Aiden said in chat. That's why. But again, I don't really use quarterly theory. I think it's a little complicated. And I can do everything fine and I can be profitable without quarterly theory. So I just don't see any point in it for me. Okay, but again, the main thing with all these 10 o'clock times is you can clearly see there's a pattern. A lot of times you'll have some sort of reversal at them. Okay. Now, what do you notice about this one here? What can you infer off of this one here? I can't answer that question. Just I can't answer if it applies to Forex as well. I mean, I'm sure you could take a quick look at Forex and find out for yourself, which I can do. I'll find out in a second. So what do you guys think? Like, what can you infer about this right here? If 10 o'clock should be a reversal, what does this tell you here? Can anyone make like a good inference? Okay, so here's the thing. Let's say we're looking at this in live time. It's 10 a.m. here. We got a big move up. This would actually be a really good time to look for a 10 a.m. reversal. So we had the big move up. Now let's look for a model here. Candle. Play candle, play candle. Okay, do we see any bearish for value gaps? No. And then we go hit high day, and now it's already 10:30. Do we see any model telling us to short here? Yeah, there's not a single thing here telling me to short. And now it's 10:30 and we haven't reversed. So now that it's 10:30 and we haven't fully reversed, what does that kind of tell you if 10 o'clock if it made a lot of sense that 10 a.m. should be a reversal, let's say down to here, and we don't get that short model, we don't get any short at 10 a.m., what does that tell you? Yeah, it's likely to tell us it's going to be a trend day at least until the next session, which at least until like 1:30, maybe even after, because it would make a lot of sense here to get a reversal back down to this low, because it's just a lot of people ask me like, why am I always so interested in retracing to a fair value gap like this? Well, it's a big fair value gap. We usually end up filling these all. So if we don't get a reversal by 10 o'clock, like it's just we're probably not going to get a reversal the rest of the day if that's the case, because it would make so much sense to get there. And it's not like you're going to take a loss, because it doesn't really give us any short model here. But the fact that we just don't get a short model here around 10:30 just is like, okay, yeah, we're probably gonna be a trend day up after that. Okay, so that's like another way you could use 10 a.m. reversals. If you don't get that 10 a.m. reversal, don't trust any shorts after that, because if we get that 10 a.m. reversal and it looks really good, like we should have gotten it here if I were right. Okay, and I thought we would, but we never did that day. And you can kind of see we get like a mini short, but what happens? We just end up going back to high day again. Okay, so just saying this and how we didn't really get a reversal here, just it makes a lot of sense that we were just gonna keep going up there just because of this and the fail to kind of reverse here. So that's like a key thing you could learn from it. So like here, okay, you can see we kind of reverse here, and let's see if we get like a model here. I'm gonna just go in the 1 minute chart. So this was 10 a.m. the other day. You can kind of see a bit of reversal here. Do we get a model here? I mean, yeah, we do. I honestly was not bullish here, but in hindsight, we did get a model here. You can see it puts in a bearish fair value gap of 10. We come up, we reject that fair value gap, and where does that take us? Low day. So that would have been a model if you're bearish. Okay. Yeah, 950. So can someone send the macro times PDF and at super user? Um, yeah, so just look at what Darius sent. Okay, right here. Here's another example. Do we see a model here right at 10 o'clock? Like 10 o'clock on the dot? No, but do we see a model kind of in this vicinity? Yes, we do. Okay, 10:03, 10:06. Right here's your model. Right, so it still is fine to take. Okay, if it happens like after like 10:15, that's when I would stay away. It has to happen between like 9:55 and 10:15. I mean, 10 o'clock to 10:15 would be the ideal time, but like 9:55ish to 10:15 is probably the best time. But do you see a model here to short? Yes, you do. Happens right at 10:08. So this is, or 10:07. So this is fine. Okay. Um so that you see that, so it gives us a short model there. Okay, now if we go back to the previous 10 o'clock time, does it give us a good long model here? What do you guys say? And I know everyone here probably has different models, but what does it really look like it gives us a good long model here? All right, so this answer would be a little more subjective. Why? Because for me, I would actually say no. This just looks like chop to me, but if you're like an order block trader, I maybe could see like an argument for maybe long in this order block right here. Okay, or something like that. But for me personally, I would say not really. I mean, it kind of gives us an inverse, but once I see this chop here, I wouldn't trust this, especially after all this chop here. I wouldn't trust it. And I bet you it's like a 2 minute, 3 minute bearish fair value gap. So I would say no. But do we still reverse here? Yeah. So the concept is the same, but sometimes you're gonna not see your model here, sometimes you will. And this for me is just an example where I wouldn't see a model for me to long. Now, if you're an order block trader, this might be a model, right? So, or if you're on like the 15 or 30 second, I bet you it's a model, right? This is probably a model in like the lower time frame, but right here I don't see any clear model for me. This is just like top, okay. Go back to the one more. I'm gonna go over here. Okay. So right here, do we see? So half of you guys aren't gonna understand this because you probably don't know how I personally trade. But do we see a model here? And if you're very new to ICT, this might be a little confusing for you, but yes, I would say yes. Okay, now why wouldn't this be for people who know like how I teach and you watch my inversion videos? Why wouldn't this be a loss for me? Like, why, if I shorted this, why wouldn't this be a loss? Yeah, because when we reject this, look what happens. We go back down and hit that internal liquidity we made. See this internal liquidity we made? So we made a low, came back up, rejected this. The way I trade is if we hold this and then hit that new internal liquidity, I move my stop to break even. Do you see how this works here? So for me, yes, it would be my model, but I wouldn't have taken a loss. I would have gone south to break even because I would have moved my stop to break even when we hit this new internal low. So I'd actually say it's valid, but it's just a trade that was want to be a full win. Does that make sense, everyone? That's how I trade. You have to trade like that. No. I know there's probably people in here who take the 2022 model and they're just going to try this. And they're not going to move their stop to break even. They're just going to fully on try this, which that's fine. This is a good risk to reward in my opinion. I think it's worth it, but I like to have a higher win rate. I do not take this. Okay, but this is about almost 3R if you like took something like this. But I know there's going to be people in here, this is their trading style. This is not my trading style. This is fine sometimes, though. Okay. Okay, so that's that. And then we have one more drawn out. I'll go over one more. Okay, last one. This is just clean right here. Do we see a model here? Yes, so I see a couple of different models here. I see an inversion here, okay? A little inversion there. You can see we retest that right at 10 o'clock, okay? We have an inversion there, okay? And then one of you guys said this is a breaker. This could be a breaker in a higher time frame, but for me, I mean, you'd have to see the breaker would have to be a swing high, okay? Technically this is not a full swing high, so I mean, this isn't a breaker in the 1 minute time frame. It could be a breaker on like a 2 minute or 3 minute, but this to me is not a swing high, therefore this cannot be a breaker because a breaker has to be a swing high or swing low. Even this, okay, this would be the breaker if this is the swing high, but it's just not. Okay. I mean, it's probably, if I had to guess, it's probably a breaker here. I just can't see it in this time frame, and that's just based off of screen time. I'm not going to go to another time frame, but I'm guessing this is the breaker here, and you can kind of see we come up, retest it. Just based off the 1 minute, you couldn't say that, especially if you're newer. And again, I know breakers can be a little confusing to people, but yeah, this also could be maybe a Reaper. But yeah, I don't want to teach any of this stuff because it's going to confuse people. But I would say there's a clean model. There's a very clear inversion here. Okay, this I would say the model, and this is actually BPR. So the way I trade is I take the inversion here, and then my stop loss is just a close below the candle, and then it turns into a BPR. So again, if you need to watch if you go to the study channel and go to the link, if you scroll a little bit up in the study channel, you'll see how I trade my inversions, but this is definitely an inversion. And then where do you move your stop to break even on something like this? Yeah, the next internal high. So it would be here. So it could be here. It's honestly, it's really up to you guys. Like sometimes I'll wait for here, but in this situation, you can kind of see we make a new internal high, drop down to the entry, and then hit the internal high. So you could put it to break even after you hit this high. what's like a really good way to visualize this? I think a good way to visualize this is if you go to the line chart. So I'm just gonna have a big box here. So if we go to the line chart, you can see it much cleaner. Look at this. Do you guys see it much cleaner now? See how this is like, if we're looking at market structure, see how this is the last lower high? It was this, and then this is the last lower high. So you can move yourself to break even to this. Okay. But I know on a candle chart, sometimes it's not as easy to see. But if I just draw a path here, you can see the structure here. So I just move myself to break even, kind of on the high that we break, which was right here, but then we make a new lower high, so I would change it to here. No, it is a breaker, Uncle. It's just you can't really clearly see it on the 2-minute. All right. So yeah, do you guys see like the power of just looking at 10 a.m.? And from my back testing, here's the thing. If you were to literally just to use an account just for like 10 a.m. reversals and this failed, would you be mad that something like this failed? Like, let's say you tried this play here and it failed. Yeah, I wouldn't, because from my back testing, just this strategy alone is profitable. So like, even if this is a loss, it's like, okay, well, the next one tomorrow is probably going to work. You guys get what I'm saying? And that's the importance of just back testing stuff like this. Because like, even if this was a fail, I wouldn't really be that worried, because long term, from what I've seen, it's profitable. I know a lot of you guys have trouble with emotions and you're gonna get mad in the moment that something like this is fails, but I'm telling you, if you backtest your strategy, you will not care if it loses. If it's a play that's not valid and you take it anyways, then yeah, I would be mad. Like, let's say I tried taking a reversal at 10:30 and it failed, then I have no data on taking 10:30 reversals. Then yeah, I might be a little mad it fails. But just this data off a 10 a.m. reversal, just it's so important to know the stats of them, because if they fail, you're like, well, I know this is profitable in the long term. Doesn't matter, you know. The name I just call it the inversion strategy. Again, I learned it from ICT. I didn't really learn the strategy from ICT. I just learned what an inversion was from ICT. How I trade it is way different from him. I don't even know idea how he trades inversions. He doesn't really talk about them that much. I kind of made my own strategy surrounding inversions, and I kind of put up my own playlist on YouTube. So yes, everything I do is all part of a market maker bot with market maker sell model. I'm always making sure, like, I'm always looking for the higher time frame models. And this is the last thing I'll say, but make sure you guys, I'll show you a really good YouTube video to watch. If you go on YouTube, okay. By the way, make sure you subscribe to me. If you go on YouTube, you type in MMXM Zusi. This is just an amazing video. I think this is the one. This is probably my favorite video that really changed my trading. But this one right here, it's an hour long. Just if you can understand this video and you know when we're in a market maker's buy model or sell model, you can trade everything else fine. Because like, if I know we're in a market maker buy model here and I see that curve, like, that just tells me that this inversion has to work right here. Look at this call out from my Discord on Friday, okay? You can literally see, if you go to my alerts, right here, I said, I'll try long if we inverse this, the buy side. Okay, there's multiple reasons, okay? I just figured that from the chart, we were in a market maker buy model. We kind of had that curve, and what I've learned from this video and what I've seen in screen time. So I knew that if this fair value got broke here, I knew we'd probably go up to these equal highs and then probably higher to here. So you can see this relative equal highs here, which are always targeted. But you can see the power of, okay, if we're in a market maker buy model and this is inverse, this should take us way higher. So it backs up everything for me. It's really important in my opinion. But yeah, make sure to watch that video. I'll send like a link if you guys want to watch it. Pretty sure I have it in ICT Gold Nuggets, but here's a link right there. All right. Yes, Ryan, that is another noticeable thing that you pointed out, which something else that I'm not gonna have time to talk about, but wait, was it? Yeah, so that was a Reaper. So as you guys can see in Aiden's screenshot, that was a Reaper. I figured it was. I just don't want to teach it because I'm not super masterful on it. And then yeah, it's probably a breaker on another time frame. All right, who wants to see a daily outlook here? All right. By the way, for the person who asked me, like, is this what do you think I'm gonna say to you? So the person who asked me, can you use a 10 a.m. reversal on Forex? What do you think how do you think you can determine that? Yeah, by going into chart and backtesting it. Go to the 10 a.m., mark it out, see if it reverses. All right, I can't say I don't do that. Okay, so I really can't say. It looks like from here kind of reverses right here, but again, you're gonna have to go test it yourself. If you don't test it, how are you gonna trust it? You can't just listen to what I say. If I say yes, you're not gonna just automatically trust it, right? That was one of my issues in the beginning. People said all this stuff worked, but I didn't trust it until I actually saw it. Okay. All right, so my weekly outlook is actually not is a lot more boring than you guys think. This week is Thanksgiving, meaning Thursday and Friday are half days, I believe, right? I think both of them are half days. Or is Thursday a full day off? I don't even know. I think both of them are half days. Friday to 1 p.m. Okay, both half days. So what does that mean if they're both half days? That means we're probably so I'm gonna go over two scenarios. I'm thinking we're gonna still be bullish this week. Okay. Um I'm thinking we're either gonna be bullish or just gonna consolidate again. Okay. I think the one thing I'm really interested in is this. We can see on Friday we had a bearish fair value gap here in the hourly. And I always teach, how do you determine bias? Well, on the higher time frame, if the higher time frame closes over a bearish fair value gap, you know the bias is going to be bullish. You can see the candle looked like it was going to close above, but it never actually did. We closed like to the tick, I think, or we just closed a little below. But I think tomorrow, this is the nice thing. I don't trade London. I don't trade before 8:30. So if I wake up tomorrow and it's 8:30 and ES is closing above this hourly fair value gap, where do you think my target's going to be? Yeah, the target's going to be this data high. Okay, and if we look at a side by side of NQ compared to ES here, what do you guys notice here? Yeah, ES is way closer. So I think if ES hit this high, I think we're just going to chop or go down for the rest of the week. And I don't think we're going to go down by very much because of Thanksgiving. So really what I'm looking for in the morning is if we close above this, I want this at a high. And then we'll see how, if NQ is still weak, I'm going to target this on NQ. So my weekly prediction is kind of short. It's going to be like, as long as we close above this, it's going to be this high. And then it's just going to be short. And then, yeah, that's going to be my... And it's not, that's the only thing I want. And I don't think much is going to happen Thursday or Friday. So if this doesn't play out by Wednesday, then I'm probably wrong, because with the half days on Thursday and Friday, I need to see this play out on Monday or Tuesday, and then Wednesday might not even be good. We'll see, because that's when people get off work and people are going to spend time with the family, blah, blah, blah. So honestly, like, this is really what I want to see. But when would what's the confirmation this high is gonna hit? Yeah, a closer above. So this is my prediction, but do we have confirmation yet? No, we don't. So if I wake up And we didn't close above this. Well, then do I want this? No, I need to see it close above this. So also the other thing is when we're watching a live time tomorrow and we're at this high, what would the other thing be? What is the other thing I'm looking for at this high? Yeah, I'm looking for reversal. And if I don't see any 10 a.m., any 10 a.m. model, whatever here, I'm not going to take it. So it has to align with the time. I would prefer if this aligned with 10 o'clock tomorrow. Okay, so that's kind of what I'm looking for. So yeah, it's pretty simple. If we don't get the reversal here and we displace a lot above this, then my next prediction would be, okay, if ES is really displacing above this high, we don't get that 10 a.m. reversal like we think, then what should happen? NQ, that's another long. You could get another long in NQ if that in that case. So if we don't reverse at 10 a.m. tomorrow, then I'll look to long NQ again, and then I'll look to long NQ to these highs. Okay, does that make sense to you guys? That's only if we don't get like the 10 a.m. reversal and we do inverse this. Foo, it's significant because it's the 4-hour candle open. And a lot of times when the 4-hour candle opens, we'll tend to wake up and then reverse really quickly. And that's where you get your power 3 and just, yeah, it all lines. All right, Andy said, what if ES chops inside the fair value gap before 10 a.m.? That's probably just I'm not going to trade. If I see it's just chop inside of here until 10 a.m. tomorrow, I'm just not going to touch the market. But yeah, really what I want to see is I want to see a close above this and then this high to be hit. And again, the confirmation will be the close above this. So yeah, yes, I do. For new day opening gaps and new week opening gaps, I have a chart somewhere. I think it's probably off now, but I'll just check them if I'm really lost. I don't think I have it up right now, but. And no, I do not use standard deviation measurements. I'm going to eventually, I'll make a video on it. I need to just, I don't really prefer them. I like liquidity better. All right. So that's really the last thing I have. The last thing I want to say is, again, please do not buy a premium without watching like an old live stream on my YouTube, because then you'll see how I kind of trade. Again, I'm not a signal service, even though I tend to give signals a lot. Just depends on the day, depends on the price action. You know, you get the deal. I'm trying to teach you guys, like, there's times where, like, last week was a great example. So like last week we got a perfect short model and I was bullish, so I didn't take it. And I go, okay, if you're bearish here, please short. And it was right here, I think. I know where it was. It was actually a 2-minute inversion to the downside right here. So there was this, and I was bullish, which I ended up being right, but you can still be right, and this still plays out. So I basically told people, I'm like, hey guys, I know I'm not a signal service. I'm only going to demo this because I'm actually bullish here. But if you are bearish here, please take this in a live account, right? You please, because this is a good play if your bias is right. So I told people, I'm like, okay, please short this in a live account if you are bearish. If you're bullish like me, just take it on demo, just tape read it, whatever. But you can see, like, there's times where this will still play out even though I'm not taking it. And then I actually end up taking the bullish entry later, which I called out. But again, you want to try to trade along with your bias, or else you're definitely get stressed out. You know. But yeah, there's gonna be times like that. I live stream price every single day starting at 9 o'clock, and then I'll go to 10:30, and then on Tuesdays and Thursdays I'll go to like 11 or 12, and then sometimes leopard streams in the afternoon. But yeah, please do not, like, I saw a little more, like, there's a decent amount of people who bought my premium, I think yesterday. I think it was from my one tweet on Twitter, and I know half of them are probably going to be confused or not like my trading style, whatever. So I please strongly recommend watching my old live streams. I mean, only 5% of people don't like them. So, but if you're one of those people, I'm going to feel bad because I don't want you to waste your money, you know, and everyone has different trading styles. So, just be careful of that. But yeah, I live stream every day. I'm gonna have a Black Friday sale off for Friday, and it's only gonna be for the weekend, but it's only gonna be for lifetime. It's not gonna be any sale for the monthly, just so it's fair to my premium members. And I'm raising the price to $50 a month instead of $35 on December 1st, but there is gonna be a 50% off lifetime, so that's the only thing I'm doing. So yeah, I'll be back here next week. I do these Sunday night classes every day for free, and I do a couple of free live streams. I don't know if I'm gonna do this one week because of the short week, but I definitely will do one next week. But yeah. I think that's about it. If we had more time, if you have any questions, make sure to ask me in like in the chat after I get off. But yeah. Lifetime's a one-time payment, and if you do lifetime, I'll give you like a free one-on-one if you need. Typically, if you buy a lifetime, a lot of people like that kind of know what they're doing already, but like I'll do like a free one as well. All right, that's it for now. Again, I'm not trying to sell you guys anything. I strongly please suggest not buying anything if you haven't watched my streams. But that's all I want to say. Let me know if you have any questions. I'll try to. I'm usually active in trading chat, and yes, I'm sure volume will be very low this week. Okay, volume will probably be low. So yeah, that's the other thing. Yeah, so it's definitely gonna be more of an educational week, especially if volume's low and price just sucks. So I'll see you guys later. Everyone have a great night, and yeah, peace.